Well, welcome everyone to Women on Wealth. And today we have a really unique opportunity to speak to a portfolio manager and get into the mind of how they think around investing in the markets. And so to have this discussion, I have Ivana Delevska, who is founder and CIO of SPEAR Invest, which she founded back in 2021 after investing for many years in industrial and industrial technology companies. She was at reputable firms such as Deutsche Bank, Gordon Haskett, Millennium, Tiger Management, Citadel, and JP Morgan, is a graduate of the University of Chicago with a BA in economics, and today is the portfolio manager of SPEAR Alpha ETF with the NASDAQ symbol of SPRX. So Ivana, welcome. And I should also mention, you and I were just talking, you are also a mother. So
Thanks for having me, Julia.
No, I'm delighted to have you. So before we get into your professional role and how you think as a portfolio manager, I have to ask your personal experience and your insight being a female in an industry that is still so dominated by men. Can you talk a little bit about your background?
After graduating from University of Chicago, I joined JP Morgan in the M&A group doing basically industrials, materials, and just broader M&A deals. I really liked that experience, and what I realized is that every time we did a deal, I would look at it from the perspective of an investor and whether that was actually a good deal for investors or a bad deal for investors. So my next opportunity and my next role was to do event-driven investing at Davidson Kempner. So that was really my first introduction into the investing world, where I focused on event-driven opportunities. So from there, I branched out to just diving deeper into the fundamentals, and I worked on several fundamental strategies at Millennium, Citadel, at a Tiger Fund. And from there, I spent several years on the sell-side publishing research. So I've really spent some time in a lot of different roles at a lot of different firms.
Yeah, absolutely. Congratulations. Did you have mentors to help you along the way? I always have to ask that question.
Yeah, I've had many mentors. And interestingly, on the investment side, you generally work very closely with a team. Your boss actually ends up being your closest mentor and the person you spend the most time with. Unfortunately, not many women mentors. So it's really been a very male-dominated industry where I think on the banking side, there were several strong women well-positioned to succeed. On the fund management side, when I started, this would be like 10, 15 years ago, there were barely any women. So that's really been changing, which is encouraging to see.
Yes.
In banks today, like my most recent experience at Deutsche Bank, a very different approach to what maybe was there 15 years ago when it comes to women and how they're being perceived and mentored and promoted. So it's really encouraging to see that change, to see the progress going from such a male-dominated industry to a place where like women can succeed. It's been fascinating.
Yeah, that's exciting to hear. And was it intimidating during that time?
I wouldn't necessarily say that it was intimidating. I think once you get an opportunity, there is really not, at least in my opinion, I've never experienced it as being a roadblock. I think the bigger challenge is in getting the opportunity. So I think people are just a lot more cautious when they're doing the hiring, and there is all those biases that come out in the process.
Yeah, that's great. And what made you break away and create your own firm?
So interestingly, for me, it was a natural progression. At my latest role at Gordon Haskett, I was publishing research on large cap multi-industry companies. And in parallel, I was managing a portfolio of my personal money invested in the ecosystem around industrial technology. So essentially what I did was converted my portfolio into a publicly listed product, and I'm planning to use the research as a way to keep people informed. So for me, it ended up being a pretty natural progression. Obviously, starting your own business and having your own business is a very different, it presents different opportunities and challenges versus working for somebody else. But so far, it's been a great experience.
Oh, that's great. And what about any hesitancies when you made this leap into your own business?
I mean, I encounter challenges on daily basis, but there hasn't really been anything that that I would say is really changing the way I'm looking at the opportunity versus when I started.
Yep, you just charge forward. I love it. So I guess talk a little bit about the the ETF in general, because I think there are some listeners that may still be new to the concept of an ETF versus a mutual fund.
Yeah, absolutely. So it's a very interesting space where ETF by itself represents a very broad opportunity set of setups and ideas and investments. So you can have a index ETF, which would track a specific theme or a product, right? So, and then you can have active ETFs where they're really not tracking anything; they're just managing an active portfolio of investments. So that's kind of the first distinction I would make. And then within actively traded ETFs, there is also a very wide opportunity set. So where some are closer to mutual funds and some are closer to hedge funds. And the ones that are closer to hedge funds, which would be kind of more similar to what we do, will generally be a lot more concentrated. So that's really like the main difference. But with that concentration, you are bringing a completely different investment process, due diligence process, and risk management process. So it's a very wide field of ETFs out there, and investors should understand when they're investing what exactly they're getting when they invest.
I think that that's such an important point, because ETFs are exchange traded funds, right? For a very long time, were always considered passive, low cost relative to a mutual fund that was active, and you were paying a higher fee for that active management. And you're hitting it on the head, right? With kind of within this space, especially in the last, I'd say 5 or 10 years, you now have ETFs that are active like yours. And hopefully,
yeah, absolutely.
Yeah. So I think that that's very important to distinguish. So what type of opportunities do you see going forward?
So within technology, it's been fascinating to see how a lot of the innovation over the previous technology cycle has been focused on the consumer. So we've seen a lot of consumer-driven innovation, whether it's home delivery, whether it's streaming services, whether it's social media. That's really been like, when you look at the big tech winners, they've really all been consumer based technology companies, right? So like the Netflix of the world, the Facebooks of the world, Amazon as well, right? So as we look into the next technology cycle, we think industrial technology or enterprise technology is going to really be the big opportunity. And the way this is different than consumer is that it's a lot slower moving. So it takes companies a very long time to evaluate the technology, to adopt the technology. And they're really only going to adopt it if it's a reputable firm that they know it's going to be there for the long term. So generally, when companies invest in improving their technology, this is a multi-million-dollar project, right, for a company. So it's not as easy as flipping the light of a switch, right? Like where you really need to be sure that this is going to be around forever. So it's slower moving, but the opportunity set is really pretty fascinating.
So in your research, you look at companies not necessarily in the shorter term in terms of what they can do over the next 6 months or year, but you're looking longer term. Is that fair to say?
Yes, absolutely. So all of our products are focused on compounding returns over the long term. So in markets like this, where there is a lot of volatility, a lot of downside in many stocks, we will generally look to be slowly adding risk throughout the downturn. So then when you come out of it, you can see some pretty good returns. So we try to manage the risk by increasing our idea generation velocity and portfolio turnover. But in general, we will not be reducing risk throughout the downturn, given that we're focused on long-term compounding.
Okay, no, that's great. And in talking about technology, it's interesting to see the the wave of return right now. Obviously, the markets this year are down everywhere, but coming out of the pandemic, technology did so well, right? And growth companies did incredibly well. And then that kind of flipped in an environment now where we're raising interest rates, we're talking about a recession. It's struggled a little bit more than, let's say, maybe dividend paying stocks. So what's your outlook in terms of these companies going forward?
Yeah, absolutely. Basically, what we saw during the pandemic is that a lot of the technology companies were able to solve problems that were created by the pandemic. So you really saw an incredible growth in opportunities and in the earnings of these companies that wasn't really necessarily a good metric to extrapolate for the long term. It was really more of like a one-time benefit created by the pandemic. And then in addition to that, we saw interest rate increasing, right? So when you model a technology company, given that it's a long-term investment, you would usually use a DCF model. So interest rates are a key input. The discount rate is a key input of the valuation model. So as rates increase, that's really where we've seen a lot of the downside in tech today. So I would say there is two main areas of downside. One has been just overinflated earnings and people not necessarily appreciating the underlying fundamentals. And the other area has been just increase in interest rates. So pretty much the entire tech sector has been hard hit over the past year. And this is where we see the most opportunities. So for an investor like us, we like to invest in aggressive growth, right? So we're trying to find opportunities that are going to do the best over the long term. Yeah. Dividend investing is not necessarily something that we do. That's really more of a asset allocation decision, right? So it's somebody like an investment advisor should advise their clients based on their age and their personal situation, whether they need more of an income and dividends or they need more of growth products. But we specifically only focus on growth products.
No, thank you for saying that. And we totally agree. Going back to the industrial technology and kind of a slower moving opportunity going forward, without naming names of ideas that you like, because I'm sure compliance would not be happy if you did that. Can you talk about thematics? What type of themes you're seeing that you're focused on going forward?
Yeah, so we basically see a lot of opportunities in AI. That's been a theme that wasn't really was really more of like a buzzword 3 to 4 years ago, but we're starting to see a lot of innovation that's making a lot of these products available at scale. Metaverse is kind of a tangential opportunity to this, where we're seeing a lot of industrial companies now incorporate AI processes into the way they run their businesses. So what we're gonna see is, given that there is a lot of new innovation coming to the market, we're gonna see AI become a main, basically gain mainstream adoption across companies. So every company over the next 10 years will be using it in one way or another. Another big opportunity set is digitalization. And what this means is companies will be upgrading their the way they run their processes. So whether it's on the revenue generating side, how do you generate opportunities, whether it's on product development side, which would be like, how do you come up and bring new products to market, or the operation side, there is also a lot of opportunity to improve your procurement, improve your cost management, improve your inventory management. So we see basically company digitalization as a big opportunity set. So those are the two main themes. The third theme that we are really focused on is decarbonization. So we're going to see a lot more innovation coming to this market, whether it's through EVs or hydrogen. We think this is going to be another area of significant innovation.
It's so exciting to think about the next 10 years and how different it will look, right?
Yep. Yeah,
Absolutely.
and we really believe like industrial technology is going to be where a lot of the value will be generated. So it's just a very vast opportunity set.
Yeah, absolutely. Thank you. And one of the areas that we've talked a lot about this year that's calmed down a little bit more recently, but it's still there, is the issue with the supply chain around the world. It's impacted the inflation numbers. How do you see the supply chain as it stands now and maybe, continuing to the end of the year into next year?
Well, we've seen the supply chain significantly improve once the narrative changed from the Fed basically solving for inflation rather than a recession. So once the Fed started aggressively raising interest rates, that immediately started trickling through the economy. So we track a lot of data points on the ground. And if you look at spot truck rates, they basically have started declining since March. So that's really when we saw the shift from value or the shift from growth underperforming to just the broader market going down and even value underperforming. So we believe the supply chain, like if you're a company today and if you're saying that you're facing supply chain challenges, that means something is wrong with your business model, right? So like by now you should have been able to adjust to the current supply and demand environment. So we don't see this being a meaningful driver of downside going forward. It's not really going to be a big driver of the upside either, as companies now have too much inventory. So they will need to be working through these inventories to bring them back to normal. But the issue where like people couldn't get enough components and couldn't get enough materials, that's already behind us given the step down in demand that we've seen.
That's great. Thank you. And I have to say, when in a world right now where we're all watching maybe too much news, you hear all this negativity, it's so great to talk to individuals such as yourself that have the pulse, you're really focused on what's going on and you're actually optimistic, right? So that's always really good to see. Any last thoughts in regards to how you're looking at these companies and the opportunities going forward that you'd like to share?
Yeah, so I mean, I would say that while there is a lot of uncertainty and there is a lot of potential, like the next leg will probably be earnings downside for companies, I think investors should start to position on the offense and look for opportunities that will help them benefit in the long term. So usually these market pullbacks where you have the NASDAQ down 30%, the S&P is still not down a lot compared to historical like large pullbacks. So there is still maybe some downside in the near term, but these periods of time where you have such drastic pullbacks usually prove to be a great time to be adding risk for long-term investors. So that's basically what I would end it with.
I love ending it there because that's what we try to convey all the time. So thank you so much for that comment. And where can people find you?
So I recently joined Twitter. My handle is @Ivana Spear, and I'm on LinkedIn. And people can always find a lot of information on our website. We post a lot of the research that we do, and there is also like the prospectus and daily holdings of the ETF disclosed there as well.
That's great. Ivana, thank you so much for your insight and for your optimism. We love to hear that, and all the best to you with your new business.
Thank you.